Look, as me and you have talked about a lot, like it's all about putting the data points together. And you come out of that call, I'd actually say incrementally more bullish, not even just on Nvidia, but on the overall AI theme. Because of the Blackwell delays, if there was going to be one, what I view headwind or black cloud, they put that to rest in terms of yields and any of the issues there. Demand's outstripping supply anywhere from 10 to 15 to 1.
Right.
So when I look at the underlying enterprise demand, not just in big tech, but even like when you look at sovereign and you look at what I think ultimately is going to be the rest of sort of enterprise, this is a story I still view, call it bottom of the first, top of the second inning. I continue to view it. It's LeBron in high school and act.
So you really do still believe it's that early?
We're only 3%, maybe 5% tops of enterprises globally have even gone down this path.
Right.
So it comes down to like when, sometimes I think like it's very easy, like not see forest to the trees, like in terms of like, okay, October quarter, 32.5 billion, whispers 33 billion. But now the focus is more like, this is a company ultimately going toward 50, 75 billion, eventually 100 billion per quarter.
Yeah.
And I think that to me is really the trend, not just for Nvidia, but for what this means for the rest of tech.
In a world where technology constantly reshapes our economic landscape, it's rare to encounter a stock market story so seismic that it makes both novices and veterans sit up and take notice. Enter Nvidia, the tech titan that has recently catapulted itself to unprecedented heights. With nearly a 180% gain this year alone, Nvidia has become one of the top performers in the S&P 500 index. Yet, in a twist that could fuel 100 water cooler debates, the stock is showing signs of volatility just as it was approaching an all-time high set earlier this year. With a dominant grasp on the AI chip market, immense earnings growth, and a groundbreaking product launch on the horizon, Nvidia finds itself amid a swirling tempest of investor enthusiasm and geopolitical intrigue. Join us as we unravel the mystery behind Nvidia's skyrocketing market prowess and the recent jitters that have some investors on edge. Welcome back, everyone, to Investocracy.
So I want to quote you. This was the opening paragraph of your post-earnings research note. Nvidia's earnings last night was front and center globally as the godfather of AI, Jensen, are the torchbearers of this AI revolution. The tech stalwart delivered massive, quote, drop the mic numbers yet again that easily beat the street with a top line that grew 122% from a year ago quarter, with 30 billion of revenue and a robust outlook for the October quarter of 32.5 billion, 80% growth. While some buy-side whisper expectations were a tad higher for the October quarter, we believe Nvidia's surging AI chip demand, Blackwell delay concerns allayed, robust outlook, and a meteoric enterprise pipeline speaks to this AI revolution just starting to kick off its next phase of growth. I think a lot of people had that reaction, but the stock price didn't. What do you think is the main reason for why we saw Nvidia sell off almost 6 or 7% in the immediate aftermath of that report?
I just think it's like people expect Djokovic to win 6-0, 6-0, 6-0.
Yeah.
If it's 6-3, lost 3. So the point is like you're expecting like, okay, could they give a 34 billion number? Just another. It was basically what I view as call it, $500 million higher than sort of base, maybe a little below whisper. I think it ends up probably being closer to 34 billion number. Because I think now Nvidia recognizes when you're in this parabolic growth, especially with Blackwell, there's no reason for them to give a 34 billion, even though I think that's ultimately where it goes.
Nvidia's rapid ascent in the stock market is not an unfamiliar tale for those who have followed the tech giant's journey. This narrative is woven with innovation and a strategic pivot from its original video game-centric operations into a broader industrial focus, particularly in AI. The company's GPUs have rapidly become indispensable tools for training and inferencing AI models, morphing Nvidia into an AI powerhouse. In recent quarters, the company's revenue has surpassed its entire annual revenue from just a few years ago, with 87% of this income funneling through its burgeoning data center business. It's the sort of financial performance that leaves other companies wondering if they should quit their day jobs and learn to code, preferably using Nvidia's kits. Adding fuel to this growth is the eagerly awaited launch of the Blackwell architecture. The upcoming product has sparked excitement with its promise of several other groundbreaking innovations. It's no wonder, then, that demand for Blackwell has exceeded expectations, promising solid revenue growth moving forward. While Nvidia's Hopper architecture continues to sell robustly, the anticipation for Blackwell is creating a supply that even the most workaholic of supply chains struggles to match. But wait, as investors excitedly chart this promising future, the venue starts dimming unexpectedly. Shares slipped almost 7%, and it seems geopolitical factors could be to blame. Reports have emerged that the Biden administration is contemplating capping sales of advanced AI chips to specific countries. While Nvidia may have formed an impressive moat around its products, the whispers of legislative red tape send shivers through wary investors. Add to this the warning from semiconductor maker ASML about potential weaker sales in China, and you've got a scene straight out of a stock market thriller. Yet it's not all doom and gloom. But before we go any further, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates.
And I think when now it's going to start to happen, Josh, to that point, the next month, and we'll be in Asia next week, anyone that's doing Asia supply chain checks, it's actually increasing in terms of demand over supply. All of a sudden, what starts to happen is next drum roll starts. Hold on a second, 32.5, probably a sandbag number. All of a sudden, stock starts to, what I believe, continue to creep back up. And I believe we're looking $4 trillion market cap for Nvidia in the next 6 months. I just don't see what's stopping it, given all the demand we're seeing from hyperscalers, from enterprise. The use cases now are exploding. That's why Palantir, people dismiss them as that. Look at them. Look at ServiceNow. Look what we're seeing with Oracle. That to me is the next phase, the use cases, and Jensen hit on that a bit.
I want to talk about demand. This is you. You said there will be a time that competition from AMD and others ramp up, but essentially a $1 trillion of AI capex over the next few years is coming its way. And last night's conference call further confirmed this demand outlook. The stage is set for tech stocks to move higher into year-end and 2025, in our opinion, as the Fed and Powell kick off its rate-cutting cycle, macro soft landing remains the path, and tech spending on AI remains a generational spending cycle just starting to hit the shores of the tech sector. We continue to estimate for every $1 spent on an NVIDIA GPU chip, there is an $8 to $10 multiplier across the tech sector, which speaks to our firmly bullish view of tech stocks over the next year. So you're very constructive on tech going into year end and heading into 2025. And that multiplier effect, because of the GPU spend, means a lot of opportunity for a lot of stocks, not just NVIDIA.
That's exactly what we really want and what we talked to investors about is the multiplier. Because everyone, it's NVIDIA, it's Microsoft. No, this now kicks off a cycle we basically have never seen before. And anytime someone puts like the Cisco comparison to NVIDIA, show the chart, it looks the same. I covered tech back then. The difference is Cisco, 90% of their customers were essentially leveraged startups, Aethers, and all the CLEX. Who's the customers of NVIDIA? It's companies with 1.2 trillion on the balance sheet.
And governments.
And government. So my whole point is that I get the comparison looks great in a chart. Apple's on. You cannot compare what we're seeing here. It's essentially a fourth industrial revolution that's being built out. And I think now it's the next phase. It's the software players, it's the infrastructure, it's other parts of semis. It's names like AMD. It's names like in cybersecurity. How are you going to protect the workloads? So that to me is really where I see everything. That's why I'm so excited about second, third, fourth derivative.
Despite these headwinds, Nvidia's forward-thinking strategies stand unshaken. Led by CEO Jensen Huang, known for his sharp insights and humorous candor, rumor has it he suggested that Nvidia's chips have so high demand they practically need bodyguards, that Nvidia continues to solidify its competitive advantages. The genius behind this strategy is the Compute Unified Device Architecture, a system that allows for the efficient processing of AI tasks. It facilitates a flywheel effect which ensures even older generations of its technology remain valuable. These factors combine to form a robust defense against market fluctuations. Nvidia's stock continues to be viewed favorably by many analysts, despite short-term dips. Whilst the geopolitical climate poses challenges, it also represents an opportunity to purchase at a discount, an opportunity some investors might compare to finding a designer suit marked at clearance prices. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
I think actually the biggest thing that's not being priced in, the tech capex from the stalwarts, priced in. What's not being priced in is the incremental spend I think you're going to see from tech, the incremental spend we're seeing from enterprise and governments. I mean, just if I look on typical enterprise and you think government 8, 10%, sometimes 12% of overall spend, that's not numbers.
Yeah.
So as this all plays out, and any company, any government, it all starts with the red phone. It's gents. There's only one. Where are you getting the check? It's a new gold. It's a new gold, new oil.
So where does that leave prospective investors, one might wonder? Nvidia, with its extraordinary blend of innovation and market resilience, remains a strong contender for long-term portfolio development. Despite recent dips, analysts forecast a continued upward trajectory as demand for Nvidia's AI solutions escalates and the technology landscape evolves. With a streamlined product pipeline like Blackwell and sustained commitment to annual innovation, Nvidia is poised to maintain its elevated status in the market. As of now, the stock presents compelling value propositions vis-a-vis its capabilities and future growth potential. Investing in Nvidia could be viewed not just as securing a share in its financial success, but also betting on the future landscape of technology at large. As we part from this gripping story of Nvidia, the recalibration of the stock from its dizzying highs presents a unique predicament. Should one capitalize on the opportunity or proceed with caution as global market conditions seem poised at the cusp of change? We'd love to hear your thoughts. Do you see Nvidia as a prime candidate for investment, or do the recent market tremors give you pause? Drop your insights in the comments below and join the conversation. A thrilling stock market dialogue awaits. And finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.